Okay, so for this part of the discussion on PAS 16 class, we will be starting off with the subsequent measurement of your property, plant, and equipment. Okay, again, PAS 16 is the standard that governs the accounting for your property, plant, and equipment. In the other discussion on PAS 16 class, the discussion focused on the objective and the scope of the standard, the definition of terms, which includes a discussion on impairment. Okay, and the previous discussions also covered the recognition rules for property, plant, and equipment, including the rules for the initial measurement of your property, plant, and equipment. The discussion included the costs that will form part of the initial cost of a property, plant, and equipment. And as I have mentioned in the other discussion, if you are only capable of remembering one thing, class, out of PAS 16, let it be the measurement rules. The measurement rules for PPE, for property, plant, and equipment. And the rules are as follows: that your property, plant, and equipment are to be initially measured at cost. Okay, that's the big part of the discussion in the previous discussion on PAS 16. Okay, that the initial measurement of PPE is at cost. And second takeaway, class. Okay, if you can remember not just one, if you can remember two things, if you're capable of retaining two things, class, include the subsequent measurement for PPE. And the rule is that items of property, plant, and equipment are to be subsequently measured using either the cost model or the revaluation model. Okay, this is an instance or a scenario wherein the standard gives the financial statement preparers an option as to how an element of the financial statement, how an asset, liability, income, or expense are to be measured. Okay, for initial measurement, class, no option is given. Okay, the only rule is to measure it at cost. Okay, the previous discussion includes an elaborate lecture as to what will constitute cost, class, as to what will comprise the cost of the asset. Okay, but as to your takeaway, please remember, please don't forget that property, plant, and equipment are to be initially measured at cost. Okay, now as to our discussion proper, we will be focusing on the measurement after recognition. We'll be focusing on subsequent measurement, the measurement of our PPE subsequent to its initial recognition. And paragraph 29 is very clear, class. An entity shall choose either the cost model as discussed in the standard or the revaluation model as discussed in paragraph 31 as its accounting policy, and shall apply that policy to an entire class of property, plant, and equipment. Okay. Another possible takeaway here, class, is that the use of the cost model and revaluation model is an accounting policy. Okay. So if ever you would be asked, the entity change its change from cost model to revaluation model, then you will have to recall your learnings from PAS 8 class, the rule on accounting changes, on changes in accounting estimates and prior period errors. So you will now know that the proper treatment for a change from cost model to revaluation model would be to treat it as an accounting change in accounting policy. Therefore, you will have to treat the change, you will have to apply the change retrospectively. Okay, but this is me trying to connect the other standards. Okay, but our focus again here would be the fact that for the subsequent measurement of your property, plant, and equipment, you have the option between the cost model and the revaluation model. Okay, just to go over paragraph 29-A class, 29A. You'll notice, class, if you go over the standard, you will have supposedly the provisions in the standard are numbered. Okay? If you will see a number and then a letter class, that would indicate that this is an amendment or an addition to the standard. Okay, so paragraph 29A essentially is a new paragraph class. Okay, the owner-occupied classification of assets is relevant when discussing investment property. Okay, so I want you to approach paragraph 29 class merely as a source of another item to which PAS 16 applies. Okay, again, if we go over paragraph 29A, this tells us that some entities operate either internally or externally an investment fund that provide investors with benefits determined by units in the fund. Similarly, some entities issue groups of insurance contracts with direct participation features and hold the underlying items. Some such funds or underlying items include owner-occupied property. The entity applies PAS 16 to owner-occupied properties that are included in such fund. So again, our takeaway here is that if you are given class a list of accounts, a list of items, and you are asked to identify, is PAS 16 applicable to this item? Okay? Or if you are asked, compute for the total amount for which PAS 16 is applicable. So basically, paragraph 29A tells us that all the funds being mentioned here are governed by PAS 16 because they are considered owner-occupied property. Okay. In the discussion on PAS 40 class 40, which governs your investment property, the distinction between owner-occupied property class and investment property is really important. But as far as PAS 16 is concerned, we need not give so much attention as to the phrase owner-occupied property class. Okay, the important takeaway for paragraph 29A is that this gives you an example as to assets wherein PAS 16 should be applied. Okay, let's just also include 29B. Under PAS 40 class, you have the option between the cost model and the fair value model. So somewhat similar to PAS 16, wherein we are given with an option, but they are different in the sense that the options are different. So what are the options in PAS 16? Cost model and revaluation model. What are the options in PAS 40? The options are cost model and fair value model. Okay. So again, two very important takeaways lang class. Initial measurement, cost. Subsequent measurement, cost model or revaluation model. So it would logically follow class. The next question you should ask is, what then do we do if we adopt the cost model, if the accounting policy is the cost model? So basically, that is answered by paragraph 30. After recognition of an asset, meaning after initial recognition, an item of PPE, an item of property, plant, and equipment shall be carried at its cost, less any accumulated depreciation and any accumulated impairment losses. If you'll see, class, this is very similar to the definition of carrying amount as provided in the definition of terms in this standard. Okay, but nonetheless, okay, if you're asked what should you do or how should you maintain the account of a PPE that is measured that is subsequently measured using the cost model, then the answer is to carry the asset at its cost less any accumulated depreciation and accumulated impairment losses. So meaning, supposedly, if you're using the cost model class, the historical cost will serve as the carrying amount of the asset. But following the cost model, you begin at the historical cost, you begin at the initial cost, and it will change after providing allowances for depreciation and impairment. So meaning, the carrying amount of your PPE will gradually decrease as the amount of accumulated depreciation and impairment increases. Okay, so you start at the cost, and then you gradually deduct all the charges for depreciation and impairment. Okay, so little by little, the carrying amount of your PPE will go down and the decrease will correspond to the amount of depreciation and impairment that is recognized. Okay. So whether a company implements the cost model or the revaluation model class, items of PPE again should be initially measured at cost. So please do not forget that one, because when we talk about revaluation model class, you would somehow confuse it with the fair value model, because you will have to change the carrying amount to the fair value. But again, regardless of the policy being used class, whether the cost model or the revaluation model, the initial measurement should still be at cost. Okay, so under the revaluation model class, you will still begin at the cost, the historical cost of the asset. Okay, so the difference between the two models class lies on how the property, plant, and equipment is subsequently measured and presented. And again, that should be understandable at this point, because these options are available for the purposes of the subsequent measurement of our PPE. Okay, so just to reiterate class, under the cost model, the carrying amount of the PPE is equal to its original or historical cost minus accumulated depreciation and impairment losses. So if you want to convert it into a formula class, the original or the historical cost minus accumulated depreciation and impairment losses. Whereas under the revaluation model class, the carrying amount would be equal to the revalued amount less depreciation and impairment losses. So initially you start at cost, okay, and then if there will be revaluation, then the carrying amount will be changed to the revalued amount. Okay, we will discuss later as to what is this revalued amount. Okay, so in short class, the deductions are the same for both models. You will have to make allowances, or you will have to give way for charges for depreciation and impairment. Okay, it is the amount to which the deductions are charged to class, wherein the two models differ. Under the cost model, it is simpler. The original cost is used all throughout the life of the asset. Okay. On the other hand, the revalued amount will be different. Every time there is revaluation, the starting point to an asset's carrying amount changes. Okay. Supposedly, the carrying amount of the asset less the previous carrying amount of the asset less depreciation and impairment. That happens in both cost model and revaluation model. The issue here is from what amount will the depreciation and impairment be deducted from. Okay, so under the revaluation model class, every time there is a revaluation, again you will have to change. Every time you will have to revalue your property, plant, and equipment, then the starting point in the computation of your carrying amount, in the determination of your carrying amount, will change. Every revaluation, the carrying amount of PPE is changed to its fair value. So this will be your revalued amount class. Okay. Again, every revaluation, the carrying amount of PPE is changed to its fair value at the date of revaluation. Okay. And please take note that we are using the fair value and not the fair value less cost to sell. Okay. If you can recall class, you should have encountered fair value less cost to sell in PAS 2, and also in the definition of terms in PAS 16. We use the fair value less cost to sell in determining your recoverable amount. Okay, I hope you have read already that your recoverable amount will either be your fair value less cost to sell and or your value in use, whichever is higher. Okay, but again, that is already discussed in the previous lecture class. Let's just focus on revaluation. Under the revaluation model, again, the carrying amount of the PPE is changed to its fair value. And please do not confuse the fair value as our revalued amount with the fair value less cost to sell. In revaluation, there is no need to deduct the estimated selling cost since there is no intention of selling the PPE. Okay, so when you are restating, the term here would be restating. When you are restating the carrying amount of your PPE from its previous carrying amount to its revalued amount, which is again your fair value, please be careful in case the problem will give you the fair value less cost to sell. That is not the correct amount to use. Okay, it should just be your fair value. Okay, In our future discussions class, you will encounter another valuation model, which is again the fair value model, which we have already mentioned earlier when we talked briefly about PAS 40. Okay, please remember that the fair value model does not apply to property, plant, and equipment. Okay, the fair value model generally applies to investments. That is why this is available for your investment property. Okay, under the fair value model class, just to give you an idea, uh, the fair value model is basically a more frequent kind of revaluation model. Okay, so what do we do under the revaluation model class? Under the revaluation model, we restate, we change the previous carrying amount of the PPE to its fair value. Okay, we change it to its revalued amount, and the revalued amount would be your fair value. Okay, so basically under the fair value model class, it's just the revaluation model, but we do it a lot more often. Okay, carrying amounts are still changed to the fair value under the both fair value model and the revaluation model class, except that in fair value model, the restatement class, the changing of the carrying amount is done annually. Okay, under the revaluation model, we do not do it annually class, but under the fair value model, every year you will have to change the carrying amount so that the carrying amount will reflect the fair value of the asset, will reflect the fair value of the uh, investments. Okay, under the revaluation model class, revaluation to the fair value, restatement to its fair value class is done based on the standard only with sufficient regularity class, only when there is a significant change in the fair value. Okay, it is not to be done annually. So again, what do we do under revaluation model and the fair value model? We change, we restate the carrying amount so that the carrying amount will now reflect the fair value of the asset. What is the principal difference between revaluation model and fair value model? Under the fair value model, the changing of the carrying amount, the restatement of the carrying amount happens annually, whereas the under the revaluation model, we only do it when there are significant changes in the fair value. Okay, if we go over paragraph 34, the frequency of revaluations depends upon the changes in fair values of the items of property, plant, and equipment being revalued. When the fair value of a revalued asset differs materially from its carrying amount, a further revaluation is required. Some items of property, plant, and equipment experience significant and volatile changes in fair value, thus necessitating annual revaluation. Such frequent revaluations are unnecessary for items of property, plant, and equipment with only insignificant changes in fair value. So as I have mentioned, class, there is no need for us to restate it to its fair value every year. We only do it when the change is significant, or as the standard states, class, when the fair value differs materially. Okay, so if the difference is material, class, then that would require revaluation. Okay, but of course, paragraph 34 tells us that it is then also possible to do it annually. Okay, but when do you do it annually? Only if the changes are significant every year. But if not, there is no need for us to make the restatement. There is no need for us to make the revaluation. Okay, paragraph 35, when an item of property, plant, and equipment is revalued, the carrying amount of the asset is adjusted to the revalued amount. I have mentioned this already. At the date of the revaluation, the asset is treated in one of the following ways. So when you will now be taking up intermediate accounting class, the subject that involves already computation, you will be discussing the two ways of revaluation, which is the two ways to account revaluation class. Okay, as to how it's done, again, it's very simple. Change its carrying amount to its revalued amount, and the revalued amount is the fair value. As to how you accomplish that in your accounting records class, these are the options being mentioned in paragraph 35. But since we are not dealing with entries class, then there is no need for us to focus. There is supposedly no need for us to focus on paragraph A and B, as long as we know that in revaluation, we change the carrying amount to the fair value. Okay, so here in paragraph A class, This is what we refer to as the proportional approach. But again, this is not focused in our subject yet. Okay. Paragraph B is what we call as the elimination approach class. Under the proportional approach, the accumulated depreciation is to be proportionately reduced, while under the elimination approach class, the accumulated depreciation is reduced to zero or simply eliminated class. The accumulated depreciation is simply eliminated every time we have the revaluation. Okay, regardless of the method used class, the carrying amount of the revalued asset should be the same amount, which is the asset's fair value at the date of revaluation. Okay, so again, the goal in revaluation, because I cannot emphasize this enough, the goal in revaluation is to change the previous carrying amount to the fair value, to the revalued amount. As to how you are going to accomplish that in your accounting records, you may either use the proportional approach or the elimination approach. Proportional approach, slow reduction, slow and gradual reduction to your accumulated depreciation, whereas in your elimination approach, you reduce to zero or you completely eliminate the accumulated depreciation, so that every after revaluation class, if you use the elimination approach, the balance of your accumulated depreciation will be zero. But again, that is more a concern of your intermediate accounting, because again, we will not be dealing with journal entries here. What I want you to take away from this class is what we do when we revalue the property, plant, and equipment. The previous carrying amount is changed to its fair value. That's it. Very simple lang, class. Okay. Paragraph 36 is a good source for a true or false question that may be asked in your multiple choice examinations. If an item of property, plant, and equipment is revalued, the entire class of property, plant, and equipment to which that asset belongs shall also be revalued. Okay, and paragraph 37 gives you the different classes of property, plant, and equipment. Okay, but you have a caveat there, proviso clause in paragraph 38. However, a class of assets may be revalued on a rolling basis, provided the revaluation of the class of assets is completed within a short period and provided the revaluations are kept up to date. Rolling basis class meaning you revalue them by batches. Okay, the batches are revalued in different dates or periods. If an asset's carrying amount is increased, okay, paragraph 39 and 40 class would be very important, because this would tell you as to what you are going to do with the result of the revaluation class. If an asset's carrying amount is increased as a result of revaluation, the increase shall be recognized in other comprehensive income and accumulated in equity. So this is important. If you recall the discussion in past one class, I have emphasized that many questions will ask you to determine whether a certain item of income or expense is to be reported in your profit or loss or in your other comprehensive income. And if you can remember, class, revaluation surplus is part of your other comprehensive income. And if the carrying amount will increase as a result of a revaluation class, that will give rise to your revaluation surplus. Okay, it shows there under the heading of revaluation surplus. Okay, so the amount that goes into your other comprehensive income would be the changes to your revaluation surplus, while the accumulated revaluation surplus is to be reported in your equity section class. Okay, again, this is very important because this concerns the presentation of your financial statements. You will be asked, where do you report or how do you call the increase in the carrying amount of your PPE as a result of a revaluation? The answer is revaluation surplus. Where is it to be reported? You would say the changes to the revaluation surplus are to be reported in the other comprehensive income, whereas the accumulated amount is presented in your equity section. Okay. However, the increase shall be recognized in profit or loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in profit or loss. Now, I would understand if that sentence would be confusing, class. Okay, let's put it aside first. Okay, I just want you to remember the the single objective in revaluation class is to change the carrying amount to the asset's fair value. If the fair value is higher than the previous carrying amount, then there is a revaluation surplus. And again, the revaluation surplus is to be reported in your other comprehensive income in the year of revaluation. Now, the opposite of an increased class is what is being contemplated in paragraph 40. If an asset's carrying amount is decreased as a result of revaluation, the decrease shall be recognized in profit or loss. Okay, why will this be in profit or loss, even though it's a result of revaluation? Because in essence, class, this is actually your impairment loss. Okay. Again, in revaluation, you change it to its fair value. So if the fair value is lower than the previous carrying amount, then that means the asset is actually impaired. Okay. Continuing here, however, the decrease shall be recognized in other comprehensive income to the extent of any credit balance existing in the revaluation surplus in respect of the asset. The decrease recognized in other comprehensive income reduces the amount accumulated in equity under the heading of revaluation surplus. What makes paragraph 39 and 40 confusing, class, would be the treatment for reversals, class. Okay, the treatment for reversals. But before getting confused on reversals, class, let's just focus on what we can easily understand at this point. If the result of the revaluation is an increase, then it is a revaluation surplus to be reported in your other comprehensive income. If the result of the revaluation is a decrease, okay, meaning there is really no surplus, the true scenario here really is an impairment. So as you should already know, impairment loss is to be reported in your profit or loss. Okay. Again, the revaluation decrease described in paragraph 40, class, happens when the fair value is lower than the previous carrying amount. In short, the scenario contemplates an impairment, class. Okay. So this means the revaluation decrease here really is just an impairment loss. Okay, I cannot emphasize that enough. That's why it is to be reported in your profit or loss. Now, focusing on the reversals, class. The second type of revaluation increase described in paragraph 39, class, pertains to a recovery of a previously recognized impairment. Okay, so what happened is before the asset was impaired, but later on, as a result of revaluation, the fair value is higher now. So there is now a recovery of a previously recognized impairment. The scenario is the asset was revalued before and it turns out the fair value was lower, so the asset was impaired. Subsequently, the fair value increased, and instead of recognizing revaluation surplus, class, the revaluation increase is just a gain on reversal of your impairment loss. Now, again, you are not yet very familiar with impairment loss, class. Okay, but again, the scenario here is there was a previous revaluation, and the first revaluation resulted in decrease. So you recognized impairment. There is now a second revaluation, class, and the second revaluation results in an increase. Okay, so the revaluation increase for the second revaluation will not yet be recognized as revaluation surplus, class. It will be treated first as a recovery. So if during the first revaluation, class, there is an impairment loss of 300,000. There is an impairment loss of 300,000. And then the second revaluation, the fair value is the carrying amount is to be increased by 200,000. The increase of fair value in the amount of 200,000 will not be recognized as revaluation surplus because it was not yet able to fully recover the previously recognized impairment. Okay, so the 200,000 increase in the second revaluation will just be considered as a gain on reversal of the impairment. However, class, if on the second revaluation, if the amount of revaluation increase was 500,000, okay, again, first revaluation, it resulted in impairment loss in the amount of 300,000. Second revaluation, it resulted in a revaluation increase in the amount of 500,000. Okay, so how then should you report this 500,000? This 500,000 class would be split into two. First part would be 300,000. The first 300,000 of the 500,000 revaluation increase would be treated as a reversal of the previously recognized impairment loss. So on the first revaluation, impairment loss, 300,000. In the second revaluation, there's an increase of 500. So the 500 would be reported in two ways. The first 300 as a gain on reversal to recover the previously reported impairment loss class. The extra 200,000 can now be recognized as revaluation surplus because the amount of increase now has exceeded the previously recognized impairment loss. In the first scenario class, the scenario wherein the revaluation increase is only 200,000, the entire 200,000 will be treated as a reversal of the impairment loss. It will be treated as a gain on reversal. No revaluation surplus yet because the amount of increase has not yet matched the previously reported impairment loss. Again, it's okay if this is not clear on the first time you are hearing this class. If you have the luxury of time to listen to this again, please do so. But this would be easier to demonstrate when you will be dealing with problems. Yeah. So then opposite to what I have just discussed, class, is the second decrease described in paragraph 40. The second revaluation decrease in paragraph 40 pertains to a subsequent decrease in fair value, class, when a revaluation surplus had previously been recognized. The amount of decrease from the carrying amount to the fair value is not yet considered an impairment loss because if there is still an existing revaluation surplus. Okay, the decrease is charged first to the revaluation surplus. In short, decreases in carrying amount as a result of revaluation is not yet an impairment loss until revaluation surplus is fully exhausted. So what do we mean? In our scenario class, first revaluation, we have an increase. Okay, unlike our first example earlier, there was an impairment. Here, first revaluation, let's just go over the time class. Let's just finish this one. First revaluation, it resulted in revaluation surplus in the amount of 400,000. Okay, the fair value increase, so we have a revaluation surplus in the amount of 400,000. Second revaluation class, fair value is now lower. Okay, so as a result of the second revaluation, we will have to decrease the carrying amount by 200,000. The question now is, since there is a revaluation decrease in the amount of 200,000, how should you report this decrease of 200,000? Should this be reported as an impairment loss? The answer is no. The revaluation decrease of 200,000 should be charged first to the previously recognized revaluation surplus. Since in the first revaluation we had revaluation surplus of 400,000, it is not a big concern that it decreased by 200,000 during the second revaluation. We will not yet recognize any impairment loss because the revaluation decrease here has not yet fully exhausted the previously recognized revaluation surplus. Had it been the case, class, wherein the revaluation decrease amounted to 700,000, okay, first revaluation, we have revaluation surplus of 400. Second revaluation, we have a revaluation decrease of 700,000. In that case, the 400,000 would be charged against the previously recognized revaluation surplus, while the extra 300,000 revaluation decrease will now be reported as an impairment loss. Okay, so basically the second portions of paragraph 13 and paragraph 40 tells you what to do during subsequent revaluations, class. During the first revaluation, very simple lang. If it increases, revaluation surplus. If it decreases, impairment loss. Okay, it gets confusing when you are now on the subsequent revaluation cycles, class. Okay, going on paragraph 41, the revaluation surplus included included in equity in respect of an item of property, plant, and equipment may be transferred directly to retained earnings when the asset is derecognized. Just please absorb paragraph 41, class. If you can recall in past one class, we have there the term reclassification adjustment, wherein an item of OCI will be transferred to your profit or loss. If you can recall, your revaluation surplus does not undergo reclassification adjustment. Because what do we do when the asset that gave rise to the revaluation surplus is ultimately disposed, class? The remaining revaluation surplus is not transferred to your profit or loss, but instead it is directly transferred to your retained earnings. Okay, but as far as theory is concerned, what happens to the revaluation surplus if the PPE is already disposed? Will it undergo the classification adjustment? The answer is no. It will be directly transferred to your retained earnings. Okay. Depreciation, again, I hope you have already encountered depreciation in your basic accounting class. Each part of an item, this would be a good source for a true or false question. Each part of an item of property, plant, and equipment with a cost that is significant in relation to the total cost of the item shall be depreciated separately. So basically what this tells us, class, that even a single asset class, which can be, which consists of different parts, class, can be depreciated separately. And the example given in the standard, which is a very common example, is as regards your airplanes, class. Okay, you have a singular item, you have a singular asset, your airplane, you have a single object there, but an airplane may be, the different parts of an airplane may be subject to different depreciation, may be subject to depreciation separately, class. They may have different useful life, or you may even use different depreciation methods. Okay. If we go to paragraph 48, class, the depreciation charge for each period shall be recognized in profit or loss, unless it is included in the carrying amount of another asset. Okay. If you remember in your past two, class, if we have depreciation for factory equipment or machine, okay, the depreciation can form part of the cost of your inventory. The same here. The depreciation of a PPE may also form part of the carrying amount of another asset, especially if the PPE we are depreciating here is being used to construct another item of PPE. Okay, but important takeaway from paragraph 48, class, is that depreciation charges are to be reported in your profit or loss. Okay, paragraph 49, the depreciation charge for a period is usually recognized in profit or loss. Sometimes, this is just an elaboration on paragraph 48. Just bear with me, class. Just a little more, class. The depreciable amount of an asset shall be allocated on a systematic basis over its useful life. So paragraph 50 tells us to use a depreciation method that resembles the manner in which the asset is used or consumed. Okay, please do not think that the standard tells us to use the straight line method. Okay, that's the most common method, class, and some students would think that if the problem is silent, that's the general rule. Okay, the standard actually does not actually mention the straight line model. If an asset deteriorates heavily, class, in the early years, then choose a depreciation method that results in bigger depreciation expense in the early years. Now, paragraph 51 simply tells us, class, how often residual value, the useful life, and the depreciation method are to be reviewed. Okay, so paragraph tells us that they are to be reviewed at each financial year and when the expectations differ from previous estimates. Okay. Although the other portions here are not really that trivial, class. Okay. Depreciation reduces the carrying amount of an asset, but an asset should not be depreciated to an extent that its carrying amount will now be lower its residual value. It will not simply make sense. Okay, it would be absurd to report an asset, class, at an amount of 0, even though there is an amount that is expected to be recovered if the asset is to be sold. Okay. Paragraph 55 tells us that depreciation of an asset begins when it is available for use. Okay, and of course, it will cease class at the earlier the date of the asset is classified as held for sale, or when it is derecognized. Okay, so paragraph 55 tells us when it begins and when it ends. Depreciation begins when the asset is already available for use. It ends when it is now classified as held for sale or when it is already derecognized. Okay. Paragraph 57 is about the useful life of an asset. It is defined in terms of the asset's expected utility to the entity. The useful life of an asset may be shorter than its economic life. The estimation of the useful life of the asset is a matter of judgment based on the experience of the entity with similar assets. So very important takeaway here. The useful life of an asset may be shorter than its economic life. Okay. And in that case, of course, you will follow the useful life in depreciating the asset. We're almost done. The depreciation method used shall reflect the pattern in which the asset's future economic benefits are expected to flow to the entity. Okay, and paragraph 61 tells us that the depreciation method applied to an asset shall be reviewed at least at each financial year end, and if there has been a significant change in the expected pattern of consumption. Paragraph 65 is not really part of the basic concepts expected from you, but this would be a good source for true or false question. Compensation from third parties for items of property, plant, and equipment that were impaired, lost, or given up shall be included in profit or loss when the compensation becomes receivable. Okay, I do not see any importance in elaborating this at this point. We are now at the end. The recognition, the carrying amount of an item of PPE is to be recognized on disposal and or when there is no more future economic benefits expected from the use of the asset. And last takeaway, what do you do with the gain or loss on the disposal? It is to be reported in your profit or loss. Okay, the gain or loss arising from the recognition of item property, plant, equipment shall be determined as a difference between the net disposal proceeds less the carrying amount. So this is the formula for computing the gain or loss on equipment. So please take